What's going on, everyone? I hope you're doing well. My name is AJ, and this channel is about personal finance, if you didn't know. And we want to get you financially free because we know it's pretty easy with a little bit of knowledge. Schools don't teach it, so I will. Alright, so today we're going to be talking about Robinhood. So I'm sure you've seen the news, or if you haven't already, the financial brokerages basically have cut out commissions. Not all of them, but most of them have cut out commissions from their business model. And so we're going to take a look at what are the implications of this. What does it mean for Robinhood? Is Robinhood dead? Is Robinhood still alive? If you don't know, you'll find out in this video. So, with that, we're going to get right into a little bit of history. So early to mid 2013 is when Robinhood was founded, and basically it disrupted the market. So coming out with commission-free trading, and also the fact that it was an app and you can trade from your phone, was very revolutionary. So Robinhood got a lot of young investors with their business model because of the no commission trading. And the reason young investors are enticed by that no commissions, well, everyone doesn't really want to pay commissions, but especially young investors, because they have much less money than older investors. So these young investors can go, instead of going to a different brokerage, let's say with a $5 commission, instead of having to pay $5 to buy a stock, and then also when they sell the stock paying $5, they can actually just trade for free and they don't have to lose so much money. Because if you only have $100 and you're investing, let's say a stock is $100, and you put that investment, one share, $100, make that investment, okay, so what does that mean? That means you have to pay $5. Sorry, you're already out $5 once you get in. And if you ever want to sell it, then you're out another $5 equals 10. So that means you would actually have to gain 10% on your investment just to break even with commissions in that case. Obviously, older investors, they can buy more shares, so the $5 is only a minimal impact on their total profits. But with those young investors, a lot of their profits are just going away to these commissions. And what Robinhood did is allowed for people to get into investing who otherwise probably didn't want to because of the money and costs. So as of today, Robinhood has over 4 million users, and a lot of their attraction is, like I said, young investors, because of its easy to use and very simple platform, especially for beginners in the stock market. Personally, that's what I use, and that's what I used when I first started. So now, with that background, let's talk about the implications of what just happened. As of early October 2019, we've seen, led by Charles Schwab, brokerages cutting their commissions out of the equation and basically competing directly with Robinhood with the no commission trading. So after Charles Schwab, you have brokerages like TD Ameritrade and E-Trade that just followed within 24 hours after Schwab made their initial announcement. And all of a sudden, Robinhood has a whole lot of competition in their space. And Robinhood's platform is not known as the best, so these other investors that are using the Robinhood platform, basically have the choice of leaving for a different platform if they don't think Robinhood is as good, because the only reason they ever got into Robinhood is because of the free trading aspect. But now that there's other platforms that have this free trading feature, basically, they have a whole bunch of choices and basically can choose whichever brokerage they want. So with that in mind, it's looking pretty grim for Robinhood. And if I made this video, about a week before I did today, then it might be titled a little bit differently, like maybe something like, "Is Robinhood dead?" or "Robinhood is dead," something of that nature. But there's something that Robinhood did that really brought them from the bottom, almost dead, to, I'd say, probably the front runner in the brokerage industry, at least from my perspective. Break. Hey everyone, so before we get into this final aspect of the video, I'd like to ask you, if you are enjoying the video, to please hit the thumbs up button, subscribe, and comment. Doing those three things will allow me to continue making videos and provide more perspective for you and help you get to financial freedom. So what Robinhood did is they launched their cash management. And what this is like a money market account, similar to a checking account, to where the money you don't have invested in stocks, the money that you have just lying around in Robinhood, can actually earn interest, and you can spend it using a debit card. So the very enticing feature that Robinhood is providing is the interest rate, and it's actually starting out, once it launches, at 2.05%, which is a pretty outstanding rate. And even looking at other banks with high yields, it's very competitive, and it's one of the highest ones out there. So this is not as big as the free trading that Robinhood started, but this is a big step forward, because now that Robinhood has this interest rate and can attract more people because of the interest rate, you may see people just stockpile all their money into Robinhood, use it as their brokerage as well as their bank, because there is a debit card option and you earn a very high interest rate here. So this can take away customers from banks and brokerages. That's why I think it's very exciting, at least for Robinhood and their users, because it's very competitive on the front of allowing people to combat inflation with the high interest rate and also trade stocks for free. Now, from my perspective, it looks like I'm going to be keeping most of my money in Robinhood. I'll probably have some in another bank account like I do now to spread out the money and be diversified, just in case something happens. We don't know. Anything can really happen. But it looks like most of my money is going to be placed in Robinhood, and that seems like the best bet in terms of making the most possible money. So Robinhood, instead of being dead by Charles Schwab's initial announcement, they actually have the opportunity to take a lot of the profits away from Charles Schwab. With this excess money that these Robinhood users will have, they can actually fund loans and actually get a nice profit from those loans, just like any other financial institution would do. And a notable point here is that Charles Schwab makes most of their profits doing just that, except Charles Schwab doesn't give an interest rate, and so maybe Robinhood doesn't get older investors to go over to its platform. But the younger investors who don't invest yet, they're going to be looking at Robinhood and saying, well, it's a no-brainer. Like, high interest rate and free trading. Of course, now all the brokerages are going to have free trading, but the high interest rate is the icing on the cake, basically. Will we see another, attack from other brokerages? Probably. How soon will it be? I don't know. But as of right now, Robinhood seems to be the front runner in terms of which brokerage you should get or you should use to make the most money. So what you want to take away from this video is that Robinhood is launching their cash management to combat the no commission trading from all the other brokerages. All of these actions are because of the business competition that there is, and this competition usually leads to better outcomes for the consumers. Like, look at what happened. We got higher interest rates if we're using Robinhood, and we got a bunch of commission-free trading brokerages, and we didn't really have to do anything. Another point is that Robinhood can be a lot more risky than these other brokerages because they're not a publicly traded company, so they don't have shareholders to go cry because their company is doing horrible when it comes to earnings. They don't have shareholders publicly, so it's not that big of a deal if they don't make a huge profit. So what are your thoughts on all of this? Are you going to go to Robinhood if you haven't already? Are you going to stay with another brokerage that you have? Leave in the comments below what brokerage you use and what you will plan to use if you're making that change. And be sure to subscribe if you would like to see more content and get more perspective about financial news and how to build wealth and personal finance in terms of credit cards and stock market and real estate and banks and all this stuff. Just showing, doing the three things like I said earlier, with hitting the like button, subscribing, and leaving a comment. Those three things show me that you are interested. And of course, you can look in the description for my website. I do financial coaching, and my Instagram, I'd give tips on there as well. So I hope you enjoyed the video, and I will see you next time. So I forgot to mention that the first link in the description is for Robinhood if you would like to join. And when you join through that link, you do get a free stock, and I also get one as well, so it helps me out. Feel free to join through there. Take care.